Then it's Tuesday. As I promised, it's going to become Tuesdays and Thursdays that I run MyTelescope Talks. And I'm trying to have all sorts of guests, not only from the marketing side, but also from the both VCs or investment or marketing trends or political. And today, as a guest, I have Janiina Lammi from Vendep. I met her through Vendep, who is one of the investors at MyTelescope. But I really quickly liked Janiina because she has a very fresh viewpoint on many things. So I thought that who better to have as a guest to talk about what to look for in data, but also understanding if you are VC ready and what type of questions a VC might ask you, but also as when a VC is looking into companies, what they're looking for. And of course, Janiina can't speak for everyone. She can only speak for herself and the investment thesis Vendep has. But before I say anything else, I'll introduce you, and Janiina can introduce herself.
Okay, hi everyone, and hi Rodrigo. Really nice to be here. As Rodrigo said, we initially met when Vendep was looking at MyTelescope and realizing that this was a venture we wanted to join. And today I'm an observer at MyTelescope board, so I'm sort of pleased to be able to follow the journey closely. I don't have that typical background for a VC, as I have a long journey as a marketer, and it gives me maybe a little bit different perspective on the deals. And I do feel that I'm able to support the portfolio companies and even the companies I speak to, regardless they are portfolio companies or other startups. Maybe even on some operational stuff every once in a while. And maybe one thing that's somewhat interesting about me as well is that I'm a previous B2B SaaS founder myself. So before joining a VC team, I've actually been through the journey you guys are experiencing and experienced some of the hurdles and done so many mistakes. I mean, first 6 months, I was part of Team Vendep. I was like, oh my God, every day. Understanding, I mean, why I actually pitched to Vendep 2017, and I didn't get funding, and now I know why. But it's a long story, and, and we can
And
dive.
what if you keep it short? I mean, now you said A, you have to say B, I think. So that why? What's the learning?
Yeah, there were many learnings, but I would say for us, the main thing was that we didn't have a technical co-founder. So when you are, building a B2B SaaS platform, make sure that you have a technical co-founder who actually owns the product vision. I mean, I was an experienced marketer, and my co-founder, we were building this platform for due diligence. It was called DD Ready. So my co-founder, he's a lawyer, so we had the legal expertise. I had the marketing background, and we had lots of experience on different startups we've been working with and for. So we had many aspects of a good founding team. However, we were able to find a really good CTO only when it was too late. So maybe that was sort of one of the crucial learnings. And that's something that I make sure that every tech startup has, that I present to our investment team.
I mean, if we just start there by your learnings, because you and I had a conversation before this, before we went live, and you said one of the hardest things you find now that you entered this side of the job, so to speak, of finding companies, is to understand which questions to ask to understand a bigger category. What are the main questions you ask yourself to understand if a company is ready for VC, VC ready, but also to understand if the market per se might be interesting for you as a person, but also for you as a Vendep as a team?
Yeah, I actually have a list of questions that I have in front of me when I speak with the founders. But maybe first talking about the market, because as Vendep Capital, we are B2B SaaS investor, so it's super narrow niche what we know. And in terms of the verticals, the industry, we are agnostic. So we need to be, jack of all trades, if you may. And we understand a lot of, sectors sort of on a high level, but to understand the sector or industry well enough to build a conviction whether this is something we want to step into. And that's been one of the biggest challenges for me, especially understanding what's the real market. To really give you an example, I was a while ago I was looking at this marketplace, and it was actually super simple. I mean, the founder provided with the information on as you know, on the marketplace solution, you need to have both demand and supply, and the founder was giving all the data on both sides, and it looked super promising. Yet there was something wasn't right. And only after I spoke with one of our GPs who sort of pointed it out to me was that I understood that you actually, with this particular case, it can vary depending on the company and the market and everything. So there's no sort of silver bullet to this. But on this case, you actually couldn't figure out the size of the market from the price of the rent, but you needed to look into commission. And it was super simple thing at the end of the day, but it took me a while to get there because I've been part of the investment team for a year now. So if you speak with more experienced, our GPs, for example, they have this, general thought on many verticals, and they sort of know what to look for. But for me, as a junior investor, if you may, I need to build this understanding and figuring out each and every time I enter a new market, understand, so what's the real market? So, and it's not always that obvious.
But isn't that a good thing? I'm just thinking sometimes being naive is something you want to be, because you have to, because if not, you might have, your old knowledge and assumptions from the past, and a lot of things could have happened. I don't know, when we started, the pitch deck we had for MyTelescope in the beginning was that we're going to automate McKinsey. And everybody wanted to meet me, but nobody believed that it could be done. And now all of a sudden you have, ChatGPT and Gemini and all the other stuff. If you say now we're going to automate McKinsey, everybody was like, yeah, it already exists. It's ChatGPT. So I think sometimes it's good to be naive, I suppose, because you will ask questions, I suppose, a lot then to understand. Or
yeah, I completely agree. And actually, sort of that's one of the biggest challenges for a VC, I think, to not to become cynical, because we see so many companies, so many promising companies, and yet we get to invest in only so few, especially for Vendep, since we sort of make pretty or we invest only in like 4 to 6 companies per year, and our portfolio is super condensed. So that means a lot of no's, and giving a no is, of course, it's a disappointment for the company, but it's actually, well, this is me, but it's a disappointment for me as well, because typically I admire founders so much, and you see their passion and the commitment they have, and they know they're gonna change the world, and then you have to be the person saying that, sorry, we cannot be part of this journey, and that's a tough thing. And then you need to do it over and over again without becoming cynical. And one good example probably is that I do get a lot of companies reach out to me because I have the marketing background, but I'm probably the most difficult person to convince from our team if you have a Martech solution, because I've been there, I've used them, I've purchased them, I've seen so many solutions that it's really hard for me to build a conviction, really believe in something that's going to change the world or make my work life so much easier that it's worth a lot of money. I mean,
And now that you've been in the role, you said a year. Have you started to build your own kind of, because you said you had your questions that are the set of questions that you always ask. Have you started to build your own hypothesis on kind of, this is the type of companies that I like based on these questions?
It all comes down to the founders. I mean, I at the end of the day, the world is full of amazing ideas that are executed poorly, and then there are terrible ideas that are executed perfectly, and they are super successful businesses. So, and I'm not saying that we in particular want to invest in bad ideas, but we do want to invest in execution and ability to execute. So to see a founder who actually knows the space they are working in, they know the problem they are solving, has real hands-on experience on that field, has the passion to solve the problem, and typically to solve the problem in a new way, instead of it's always the question, what's the real solution here? So who's the real user of the product, for example, and how are we solving the problem? So are we just improving existing process, or are we creating a new way of doing things? And creating new ways of doing things, that's super intriguing to me.
Yeah, I mean, if you think about the space of creating new ways, isn't I had a teacher at university that says leading edge equals bleeding edge. How do you how do you take that into consideration when you say, okay, here we have a solution that might be totally different, but maybe it's the first of its kind? How do you go about to, like, okay, because maybe sometimes the funding that's going to be needed is going to, I mean, look at OpenAI, how much money has not been put in to solve that problem.
Yeah, and I have actually an experience from my own life. For example, in my own life, I mean, DD Ready, our solution, we didn't make it, so crashed and burned that. But currently, Vendep Capital has a portfolio company who is actually working in the same space, and in a way, it validates that we were onto something. The timing wasn't right. The founders, as said, we had some strengths, but not all that was required. But you need to have so many things in place, and then of course you need some luck as well to really make it. But for example, with that, I think timing for us wasn't right. So the market needs to be ready to adapt. And today, if you look at companies' ability and readiness to accept and utilize AI, it's completely different. So yeah, the landscape has changed for sure, and pioneering stuff is super hard.
So if we go back then to your questions, your list, what would you say are the main 5 questions that you ask yourself, like, initially when you meet someone?
Initially, I start from the team. I ask about their backgrounds, try to understand the domain expertise, and sort of understanding that they have all the whole skill set that's needed, and also the drive. I do wish to understand how the cap table is structured, because the ownership is a reflection of how the founders see their roles and the control of the company. So the team and the cap table is one. Then I need to, of course, understand the business model. It needs to be B2B SaaS, then that to get interested in. Then whether it's product-led growth or sales-led. So who's the user, who's the payer, how's the pricing built, and that's sort of the first two questions. So the team and the cap table and the business model. Then I look at the market size and going back to what's the real market and is it large enough for a 100 million ARR company to fit in? And if not, is it sometimes it's emerging market and it's growing, but is it growing fast enough? And then I moved on to the product. Is the problem big and painful enough? I mean, is it a must-have? I mean, for us, it needs to be a must-have. And then why is it a must-have? And that goes back sort of to the money of the client or the customer. Then last but not least, these are sort of the questions I go through before presenting the company to our investment team. Is the competition and the differentiator. So does the company have a clear differentiator and are they able to maintain it, let's say, for 4 years? I mean, user experience is a great thing, but typically it's not a differentiator that you're able to maintain. I mean, or if you have a set of feature, is there underlying technology that makes sure that nobody can throw a lot of money on it and build something overnight that'll wipe you off the table.
Mm-hmm.
So ultimately, for a VC or for us, as we are an early stage VC, is sort of, can we raise a Series A round for this company before the competition eats away the market?
And the question there, because we talked about VC readiness, and another discussion that is also been a lot on the table. I watch a lot of Y Combinator videos where they talk about product market fit and so on and so forth. Those are two different total concepts. But if you think about VC readiness, what is a company that is ready for being invested by a VC versus being a company that is fantastic but maybe shouldn't raise money from a VC? How can you differentiate between those two, and how can you tell by the questions you ask the founders?
It actually it's pretty easy in a sense that the real question is that, are you building a lifestyle business or are you looking for an exit? And that's a big question, and that's a question the founders should discuss very early on, because the strategies are completely different, as are the funding sources. So if you are building a lifestyle business, it's a different path, and it's not a VC case for sure. And if you are building a VC case, then it means that you're gonna invest heavily into growth. So you're not really sharing dividends. You're investing in growth. You're able and willing to give up some control, because as soon as VC comes on board, you lose some of the control and you take the first steps towards the exit. And we are going to push you to really grow more and grow aggressively and raise more funding.
And thank you for that. And if you think about the question about product market fit, when I'm hearing the interviews there with the Y Combinator, they say a lot of times, actually, a lot of companies that have the ability to do like B, C, D, E, and very large rounds, many times have been pushed, to go to market, but you actually don't have a product market fit, and you can see that when you start scaling it, that something happens. How do you guys have a test or how you can support? Because when you are an early stage VC like you guys are, a lot of companies probably have just started to find that product market fit. How do you help them, and what questions can you help the founders with to make sure that they are aligned with the product and the market?
Typically, for example, now that we are moving towards the end of the investment cycle of the fund 3, so it's year 4 for us. it means that we are looking into a bit more mature companies, and we expect them to have international revenue. And by that I mean ARR. And that is typically, real test of the scalability. If you are only in your home markets and you're not able to create a model where you can create repetitive revenue from multiple markets, it shows pretty quickly that there's something lacking. And net revenue retention, are you able to upsell? Are the customers buying more? How sticky is your product? So I would say that in terms of I think our GPs would have much more extensive answer to this, but I would really look at these things: international revenue and net revenue retention, and of course the sales model. I mean, if the company is sales led, it's pretty heavy to scale. It's doable. I mean, if you have a low price point but sales led motion, then it's a tricky combination. If you have a lower price point but you have a PLG model, that might make sense.
Yeah. Also, I know that you in your spare time, it's not only investing that you are fond of. I know you have mountains in the background there. So I know that you climb a lot, but what have you learned from there? Because I mean, it's risk in the sense of VC is a risk, and the climbing mountains is of course risk. But what is your view on risk, so to speak?
Mm-hmm. Yeah, that's actually on the background. That's Matterhorn. so Lion Ridge, Matterhorn from Italy's side. Risk. I actually I never go to a mountain without being, prepared. I learned that the hard way. I typically learn everything the hard way, I guess. I'm stubborn. But I learned that when we went to climb Mount Fuji in Japan. I had this idea of it just being an easy hike to the summit. It's almost a 4,000er, so it's a real mountain. We decided to climb from the back of the mountain, which is sort of the less climbed route. And we started as the night fell. The idea was to use the night and climb through the night and the dark hours and reach the summit by sunset and see this beautiful red sunrise that you always see in the pictures. And everything went wrong. I mean, we were not fully prepared. We had terrible gear. I didn't have gloves. And suddenly at first it was raining, and then it was snowing, and it was terrible wind. And we had no place to get to shelter. We actually only had few energy bars in our pockets, so we didn't have one bottle of water and everything. We had just had this idea of a nice hike in our heads. And by the time we reached the summit, the sunrise had already gone. It was so foggy and rainy that we didn't see the sunrise at all, but we were really freezing. And that taught me that, regardless of your experience in the past, I had climbed higher mountains, and that was maybe why I underestimated Mount Fuji. But then I realized that I really need to be prepared for every climb, and that's what I think is good advice in sort of investing and in sort of startup life in general. Always be prepared. You cannot know what's ahead of you, and that's part of the adventure and the journey. But if you are not fully prepared as well as you can, it's gonna be really tough ride. You might get to the summit, but it's easier and the odds are better if you prepare.
Final question here before we have to close off this half hour, but I mean, if you think about the markets, how they've been now in 22 and 23, where they've been the opposite of bull, more bearish, and all of a sudden money went from being super cheap to very expensive. Do you, how do you foresee what's happening now? Can this have been actually something that was good for the market, because it kind of forced people to understand that it's not only the raising money that's important, it's actually the building of a company?
Yeah, and I actually would say it's a good thing. And the other thing is actually us thinking that a couple of years ago the market was overheated, and we Vendep actually made a strategic choice to slow down in investing while the valuations were really high. Our thinking was that if you invest with ridiculous evaluations on earlier rounds, well, you can see that later rounds are, harder. And that's why we stepped away from many interesting conversations, because, it just didn't make sense for us to join the ventures at that stage. However, now SaaS has been growing. It's amazing to see that SaaS has been growing, past COVID, past all the economic turbulence. It's steadily growing. Then there is this funny peak, or I don't know if it's funny, but it's when market overheated, and now it's coming back, and now it's back on the growing curve. So it's more that something happened, and now we are back on track from our perspective. And maybe that has helped companies to look at the growth metrics in more healthy way. I mean, VC expectations haven't changed. We do expect aggressive growth. However, we do want to see the net revenue retention, for example, which shows that you're growing in a healthy way.
But it hasn't also, this is just my reflection, that you have one thing is that it's looking at SaaS numbers, which is much more, use numbers and MRR and that type of key metrics. But then you have also investing in technology. And I think that's sometimes where people go wrong. Like if you look at the big investments that have been made, for example, in OpenAI, and it's a huge shift in technology that has changed the whole humanity forward. And of course that drives you need a certain amount of money to be able to get there, because to build that technology. And then you have the other thing, which is much more scaling a company and building. So it's two different use cases, but people have looked at it as one lump.
Yeah, makes sense. Yeah, there are many aspects to it. And I think, for example, this latest AI revolution has created this new generation of SaaS companies. I mean, now AI is not just a buzzword; it's a necessity for companies. So it's amazing to see the evolution of SaaS. And of course, you need these big jumps in evolution to really get to the next stage.
I've been looking at a series on Netflix on I think it's called the robber barons of the US, with the electricity and the railway. I mean, if you think about when that shift happened and all the jobs that were removed from society because nobody had, electricity was there all of a sudden, or you didn't need the horse anymore because you could take the train. And now we are as scared as they were probably then with the AI. And I think it's people, for me, it's kind of come to a conclusion of we never learn from history. We think we learn from history, but we're...
Yeah, and can you imagine in the future generations were looking at the history books and said, fossil fuels? Really?
Yeah, exactly. Exactly.
It made sense at the time.
Yeah, it made
but
sense then. Exactly. Yeah, so it's strange, and it's interesting to see how these big shifts that are happening and what we're living in right now, how it's impacting, of course, everything. But
yeah, that's actually something that one of the learnings that I've had over the years is that every decision is made with the best knowledge you had at that moment. So hindsight it seems different, but if you make every decision with the best knowledge you have at that moment, that's all you can do.
With those famous last words, we leave you for now, and thank you all for tuning in. You're going to find this episode on Spotify as well when it's turned into a podcast. Janiina, thank you so much for joining me in this conversation, and I'll see you in our next board meeting.
Yeah, see you. Thank you, and have a great rest of the day.
Thank you so much.